Kia ora and welcome to this video on coffee delivery supplies. This will be the full income statement and statement of financial position. What we're going to start with is on the right hand side here. We've got the trial balance, and we're just going to go through and identify what are our current assets and our expenses, so on and so forth. Okay, so we're going to start on the left hand side. Remember, these can only be assets plus expenses. Okay, the one exception to the rule is purchase returns, which we don't have on this exercise. Remember, on this side you have liabilities plus income plus owner's equity. Okay, so we have the example here. We know accounts receivable is a current asset, advertising is expense, bank current asset, car is non-current asset, delivery van non-current asset, discount allowed is an expense, drawings is a owner's equity, okay, negative owner's equity, electricity is an expense, general expenses is an expense, interest is an expense. Inventory, we're going to classify slightly differently today. We're going to put it under COGS, which is an expense, okay, land, non-current asset, premises, non-current asset, purchases is COGS, again, because we're going to go under a cost of sale account. Okay, rates is an expense, office salary, phone equipment, these are all expenses, okay, all the way down. Okay, so we've classified the left hand side, now we classify the right hand side. Accounts payable is a liability, but a current version. Okay, capital is owner's equity. Okay, commission is an income, so is discount received. A mortgage due in 2034. Okay, remember the question, we're in 2021, so this must be a non-current liability. Rent is an income because it's on the right hand side, and sales must also be an income. Okay, so gentlemen, what we have now is we have the income statement, the classification complete on this right hand side. What I'm just going to do is move this over to the left so I can write on this income statement. Remember, first and foremost, what we do is we write a title. Without a title, we have no idea what we're doing. So it's going to be income statement for coffee delivery supplies. As at the 30th of the 3rd, 2021. Okay, so we have a date there, and now we're ready to go. As per this, we start with our traditional, which is sales. Okay, so as we can see on the left hand side here, sales is 800,000. We can chuck that in the third column. Okay, so after sales, we don't have any sales returns in this instance, so we can just start with less cost of goods sold. Okay, and there we can underline that because that is a title that we're going to use. Okay, and so less cost of goods sold. We always start less cost of goods sold with opening inventory. And in this case, opening inventory, as we can see over here, is, you may not be able to see that, we find opening inventory at 47,000. So that's going to jump to column 2. Okay. Next, we go purchases. And remember, purchases in this example, there is no purchase returns, which means what we can do is we can go purchases straight away. And we can put that into column 2. Okay, and our purchases figure, as we can see here, is 313,600. Okay, what we can do then is then total that, because that's going to be our goods available for sale. Okay, because if you look at any of those other expenses, none of them are to do with your freight inwards or anything like that, so we can just leave it like that. Okay, what we're going to do now is total that, which comes to 47 equals 360,000. $600. Okay. What we're going to do next is then less closing inventory. Remember, we can call that goods available for sale. Okay, and then closing inventory, which in this case is right down the bottom here, and it's a tricky figure. And remember, that is also a current asset. Okay, so it's going to be 40,600, and we're going to put that in brackets because we're going to minus it off. Okay, so what we're going to do is minus our cost of goods sold. Minus our closing inventory, which is going to leave us with $320,000. Okay, that is going to be our total cost of goods sold. Okay, then we can minus those two off each other, and we get gross profit. Okay, and gross profit 800 minus 320. Okay, equals 480. Okay, we're not done yet because now we need to add our other income. We can leave a line if we really want to. In this example, we have enough space to, just to make it nice and clean. We're also going to underline add other income because it's a title. Okay, and we've got three other incomes here. First one, we're going to use commission. We're going to try, if we can, to keep this in alphabetical order, just so it's nice and neat. Okay, commission is 20,600. Okay, discount received. Discount received is at 3,400. Okay, next one is rent. Okay, which is 20,000. Okay, we can underline that there and total it into the far right column. So it's 2,600 plus 20,000 plus 3,400. That should come to 44,000. Okay. So 44,000 comes in here. We can add those to our 480 as a running total. Okay, which is 524,000. Okay. Here we can put total other income. And then we leave a line, okay, because now we're going to less off our expenses. And our expenses will come under here, okay. If we're being really accurate here, we'd keep them in alphabetical order. Just to save a bit of time here, I'm just going to do them in the order listed, just to keep it nice and easy. So we're going to start with advertising. Advertising comes to 3,200. Okay, we're next going to go discount allowed. Which is 1,200. Okay, electricity, which is 3,800. Okay, general expenses. Okay, which is 1,400. Interest, which is 38,800. Okay, we have rates, which is 4,000. Salaries, telephone expense. We got delivery fan expense. And wages. Okay, I've just written them down quickly just so we can save a bit of time. Each of those come in at the individual figures that are shown on the left hand side of your screen. Okay, the 17,800. and 27,000. Okay, if we add all those together, what will happen is we'll get total expenses and we can add those all together. 3 plus 1,200 plus 3,800 plus 1,400 plus 38. Okay, plus our 1,800 plus 17,800 plus 27,000. That should come to a total of 144,000. Okay, minus that off, we can put that in brackets because we're going to minus it. Okay, and that gets us a total of 380,000. What we call that is our profit for the year. Okay, and that's a really profit for the year, or more commonly net profit. Okay, moving on to part 2 for this exercise. Really important that we keep those figures where they are. What we're going to do now is just shift our movement over to our statement of financial position or our balance sheet. So again, balance sheet for, I'm just going to abbreviate CDS, coffee delivery supplies, as at the 31st of the 3rd, 2021. Okay, so again, start with the title. Always 1 mark for the title. Okay. What we're going to do now is we're going to stick to the structure that we have done so far. So it's going to be net non-current at the top. Okay, and non-current assets can be underlined because that's again a title. Okay, title, and our first one is actually going to be property, plant, and equipment. Okay. Okay, which is down the bottom here. Okay, we've got this note that's already been pre-programmed in, so we have to use it. Okay, whether we like using notes or not, we have to use it. So what we do is we use note number 1 because it is under note number 1 down the bottom here. Okay, so down the bottom here we have 1, so we have to identify that as note 1. What we're going to do is we're going to go over to this left-hand side. We're going to identify everything that comes under a property, plant, or equipment. And in this example, there is 4 of them, okay? So we got a car, a delivery van, land, and premises, okay? So those 4 all come under what we call property, plant, and equipment. So what you're going to write down the bottom here, and I'll just move this camera slightly so you can see what I'm doing down here. So we're going to write cost, okay? In that box there, what we're going to write is car first, and that comes to $60,000. Okay, next one is going to be delivery van at $31,000. Okay, premises at 720,000, and land at 250. Okay, and the total of that is 106,1000. Okay, so 1,061,000. Okay, so that is going to go straight into this right hand column right up the top here. Okay, so we can use this as our starting point, and we're going to chuck this right up here, 106,1000, and that's our starting point for this unit. Okay, and as we know from our classification over here on our trial balance, we know there's no other non-current assets that we're going to deal with. So what we can do is that is our final total for non-current assets. Okay, what we're going to do now is go current assets, again, it's a title, so we're going to underline it straight away. I always like to start with inventory in this section because else you always forget it, okay? And so inventory. So as soon as you think current assets, we're going to go inventory. And remember, that's this figure down the bottom end of this balance sheet. So it's going to be 40,600, okay? What we're also going to do is chuck in our other two that are there, which is going to be bank account, okay, which is 11,000. And lastly, we're going to chuck in our other current asset, which is accounts receivable. Okay, accounts receivable, which is 7.4. Okay, and that's going to total out at $59,000. What we're going to do is chuck this into this column here. And the reason why we're going to do that is because we're going to work out something during this exercise, what's called net working capital, okay? So next one we're going to lock in is current. We're going to say less first, current liabilities. Sorry, if I could spell today. There you go. Current liabilities, okay? Current liabilities are on our left, right-hand side there, and there's only one of them, which makes this nice and easy, which is accounts payable. Okay, and accounts payable, as you can see, there comes to 34,000. So we're just going to put that in brackets at 34,000. Okay, the reason why we've done that is so we can work out this figure. Sorry, my hair got in the way there. We can work out this figure here, which is 59,000 minus the 34,000, so 25,000, okay? And that's what we call our net working capital, okay? So we can write net working capital, okay? Next, gents, what we're going to do is keep going and minus off our less non-current liabilities. Again, there's only one of them, which is mortgage today, as you can see on the right-hand side, which is, if I could spell today, mortgage, which is 526,000. Okay, and that's going to be minus off. What we probably should have done is just before that, we can actually underline this and add the 1,061,000 plus the 25,000 equals 1,086. Okay, then we can minus off the mortgage. Okay, then we get our final figure for this unit, this bit, which is our net assets figure. Reminder, we can underline less current liabilities because that is that. So, what this should come to is, if we've done this nice and beautifully, 1,086,000 minus 26,000, okay, equals 560,000, okay, which is our net assets. We know now that we can use that as our balancing figure because we know we've done everything correct now. Okay, what we're now going to do is to go on to the equity section. Okay, so equity is the one that most people get tripped up by because they forget what they need to add and what they need to forget. Okay, so what you're going to start with is opening capital. Okay, opening capital, and that will be 222,222,000. Okay, always if there's an investment throughout the year, you'd add that in, but typically we always start with plus profit. Okay, so you're going to add the profit for the year, which, as we can see from over here, is 380. So we're going to add 380,800. Okay, that there is going to be underlined. So we're going to add those two together. Okay, which, if we work that out, comes to 602,000. Okay, then we're going to less drawings. Okay, because remember, drawings are removing money from the business. okay, and drawings came to 42,000, okay. And now we get our closing capital of 560,000, which we know is correct from above, and making sure that these two figures here are equal, okay. Other than that, gentlemen, that is how we do that exercise. Well, we're just finished. We need to write closing capital there, okay. But that is the end of this video on this exercise on coffee delivery supplies. Good luck.